What's up, everyone? How's it going? Welcome to today's market analysis or trade recap episode. Today is July 9th, but we're going to be recapping the nice and wonderful trade that we've taken on July 8th, which was yesterday. Today, as you know, it is FOMC day, so we are taking the day off, not looking to risk much today. And that's why we were flat today. We did not take any trades. And that's why I wanted to take time to discuss the trade that we took yesterday and discuss how this trade came to part and analyze the overall market from yesterday as well. So as you can see, yesterday we did not have much news at all other than IVPMI. So we didn't have much to work with regarding news and handle regarding news yesterday as well. But yesterday was a pretty textbook type of day. Essentially, let me give you a rundown of the levels and the overall pre-market game plan coming into the day, and then we'll talk about what led me to take different trades. Okay, so what we saw happening on a higher time frame perspective was essentially that price had made all-time highs, and now we're shifting back towards the downside. On Monday, we wanted to see how price would react either at a 4-hour around this area or this 2-hour here. And price came down to that 2-hour, and we saw aggressive buying start to kick back in. And at that moment, coming into the day yesterday, what we saw was that we were hovering between two levels. We were hovering between this upper liquidity level, and also we were also hovering between these lower levels down there and this zone as well. So what we were basing our day off of was to see a reaction off of the zone. If we break below the zone, we can take shorts. If we hold the zone, potentially we can take longs. And that is with confluence within Bookmap as well, and the fact that there has to be targets on Bookmap for us to actually reach. And same thing would apply here on NQ. Made all-time highs, coming back down. We swept out this lower liquidity, started pushing back up, and then at that time we were just hovering between different levels, but this zone area was essentially the key part. We either take shorts below it until a certain area, or we take longs above it. And once again, it has to be put in the context of the market. If Bookmap is telling us that even though we're below, that price actually wants to push up. So say we're down between, we just broke it, but price is showing signals that we're bullish. We will wait and we'll watch to see how different Bookmap levels react, and depending on that, then we can make different entries. But let's get straight into the day there. And yes, I know there's a lot of lines. There's typically aren't that many lines, but if you get into the closer perspective, you can remove this 30-minute after it had been broken. So what we saw right at 8:30 was that price actually broke below this 30-minute, positioning us for shorts. But quickly after, let's see what happened. I'm just going forward in time so you guys can take a look at what happened. We saw the shorts happen and these longs happen. Nothing much to do, nothing much to predict in that sense as well. Simply because of the overall spread of liquidity. Now these buyers are buying through all these passive sellers. And then there's a lot of passive buying now as well. So nothing we can really work with at that point itself, except the fact that there is a level there. But we just want to see what happens and how price reacts. What I am noticing and what I did notice was that there's Bookmap liquidity at 2665, 6265, pardon me, and also 6260. So we went ahead and marked that out here at 6265 and 6260. So if price wanted to head towards the downside, we have those levels there. If price wanted to head up, we had this level, but it's not continuous, so we're just watching because right now it does seem like we can head there and there's nothing for us to work with to carry that move up. So then what happens is that price actually breaks down once again and breaks through this entire level. This level, very aggressive selling had to come in order to actually break that level and push us down. And that's essentially what we saw here. Initially, we saw that buy move up, and then we saw absorption at that level, but still it was very distributed liquidity and was not very clear to really see and comprehend. You can take a look at it here on the footprint charts as well. I believe it's up here. Yeah, you're seeing buyer absorption clearly. Very aggressive buyers coming in are unable to break through these passive sellers up top, resulting in a fall down, but the overall distribution of liquidity there is also quite condensed and blurry, and we do not want to trade in such a blurry environment. But now, as we come down, we do see that price has held some sort of support here, and we head back up. And keep in mind that this support does not seem to be meaningful. We don't see any seller absorption, is what I'm trying to say. Nothing is telling us quite yet that sellers are out of the game, and I'll explain that to you in further here. We see that breakout towards the downside, but here this is what I found pretty interesting, right? This does look a decent amount blurry, but what do we notice about this blurriness? Take a look at the lower side. It's all, you can say yellow, but it's all uniform. If you look at the top, we're seeing condensed aggressive, not aggressive, but condensed passive selling participants. We're seeing lots of passive sellers here at this level compared, and we're seeing, look at this, 2230 selling icebergs. That is very significant. I'm gonna go back here and see if we could have caught anything there, but I'm not gonna bet on that. First, I want to talk about why we took the trade that we did and what we did right, what we did wrong, how it's replicable, and how it provides an alpha in the market. We came up, and this likely would be V2 level as well. Yeah, around that area. If you mark here, that's right at that 0.5 level. But we retrace into that level, and what we're seeing here is a decent sized selling barrier. And you'll see that more as we're getting into it, right? I wasn't inclined to take a short from that position, but what increased my confidence in such trade was simply because of the footprint diagnostics as well. What I saw on the footprint chart, right? As we broke through that initial support here before, right? We created lots of aggressive selling and aggressive selling delta. You can see that there's stacked imbalances, stacked condensed delta as well. There's not too much volume there for it to be too meaningful, but we do see this area as well. So say I do not mark this area simply because there's a lack of volume, and we mark this area because now there is volume and now there's stacked imbalances, and we've demonstrated that there's volume. So say we move that overall zone down, and we ensure this area is there too because of that stacked area. Look how precise that actually is. In high areas, in areas with high volume, with primarily very aggressive selling, that buyers have shown that they're unable to push through, where sellers have continued to push price down, that is a pretty bearish sign. So we came into that bearish signal level, and at that bearish signal level, there was a passive selling barrier. And this was an aggressive passive selling barrier, because it would essentially be 1.5 times this thing, right? So we have 72. What's 72 times 1.5? That's 108. So it's greater than 1.5 times this level right here. And since it's greater than that, it's showing us that these levels and these passive sell orders that are sitting there is significant, and we're seeing that up there as well. So there's two ways that price can work out. Buyers actually break through this and head towards 6285, which we did have marked out. 6285, yep. Or buyers can get absorbed at this level and aggressive selling can come in using those trapped buyers as fuel to push price lower, preferably to 6265 as there's 147 passive buyers at the area, or 6260 as there's even more being 172. That's how I modeled it, and that's what I was waiting to see. And if you take a look, we come into it very aggressively, and buyers are unable to push through. They tried coming in, but now here we saw aggressive buying come in, and this aggressive buying came in with lots of volume. Take a look here. At the top where there's high amounts of volume, we're seeing high buying delta. This is showing to us that buyers were trying to come in near the top, but were unable to continue to push price higher. And because there's such defense from selling at this area, passive selling, the aggressive sellers were able to come in, and you can see that aggressive selling here on the footprint as well. But we started seeing a reaction off of this barrier after a clear signal of absorption, and with those two confluences in play, alongside this, and alongside the fact that we've actually broken below this 30-minute now, confirming our bearish bias, that is showing us that our idea may be significant, providing us an edge that we can take advantage of. So once again, our confluences for this were absorption at that passive selling area, the fact that we broke the 30-minute, which put us into a bearish perspective, the fact that this is within a very bearish and significant delta area on footprint, the fact that we saw clear absorption followed by a reaction from aggressive selling, and the fact that there's targets below that price may actually want to head towards. All of that in unison provided us for a great trade, and we likely would have entered right when we saw that reaction occur from aggressive selling without any hesitation, because our stop would be covered to a decent extent. So 6272.5, where did we enter? 6272.75. So we entered even earlier than that. Yeah. Right when we started seeing this reaction, we got in. Right around this area. And although you might be saying, hey, but there are passive buyers at this area as well. Well, of course there's going to be passive participants near the current price right now, because there needs to be liquidity for the market to function efficiently, and these 77 to 92 orders are doing that to ensure market efficiency. And the fact that it's here and there's targets down there, and that this is here, it's showing me that it's just market efficiency rather than simply an actual barrier. Because you can see that there's 81 orders here, and the 77 orders here, 91 orders here, 87 orders there, 76 orders there. It's not that significant for us to worry about as compared to, let's say, 6260, 6265, or even this area, because 122 is greater than 1.5 times of this. That's pretty much a benchmark rule, you could say. Can be higher, can be lower, but it just has to be significant as compared to the typical market liquidity that's there. And the fact that this is stacked as well shows extra strength. We saw the reaction, entered in short. Where would we place our stop? Right above this passive selling liquidity, right at, or is it 77.5? So right at this level right here. And honestly worked out pretty well. And as you can see, that was our OG stop. We did happen to move our stop down like what, 2 ticks? Yeah. We were able to move our stop down 2 ticks simply because that passive liquidity was able to move down with the price as well, as you will quickly notice here. Start seeing selling coming in very aggressively and pushing price down. Now you're seeing that this has moved down approximately below 277, so we moved it down to just 77, which likely would have been accurate. We could adjust it later if we come back into that level, but we wanted to manage our risk. We did exactly that, and now we're not too worried. We're just holding the position. We saw that aggressive selling was coming into the market, and we're essentially just following where the money is moving. And that's the main thing. You don't necessarily want to trade against where the money's moving because that typically leads in loss. You need to trade in the direction of volume. We're seeing large participants there that are defending the large active aggressive participants from going upwards, and now aggressive selling is able to come down with significance that is able to push price down. We're seeing that volume is being distributed towards the sell side, both on the passive levels and the aggressive levels, resulting in that sense as well. Additionally, you can see that there's not crazy selling going on here, not crazy selling going on here. Here we're seeing aggressive selling delta. But yeah, then we just started to move down and we just held our position until it hit our take profit less than 10 minutes later. And that's where our Bookmap liquidity mark was here, but we noticed that price may edge the liquidity sometimes, so we underestimated it by 50 cents or half a point on ES, ensuring that our take profit gets hit, and that's exactly what happened here. In this trade, I do not think we were in the drawdown for more than 2 ticks, which is excellent because we want to enter in positions where we are not in drawdown for the most time. We want to time the executions as greatly as we can. And that's what we did here today. One thing that I do believe we could have done better was avoid hesitation at this level, because while we saw that selling start to come in a reaction, we were quite hesitant to enter in to a certain extent, but we did happen to pull the trigger, which was good. We just have to be more objective when we get into our executions and leverage that as we keep moving on as well. But let's see what happens after, because as you see, very aggressive buying starts to occur. And we swept the lower bookmap liquidity, and that bookmap liquidity really was a key level for the day. 6265 area. Because look, we're just stalling at that level, right? And we're seeing large amounts of volume here. Selling, unable to push through. Aggressive buying come in. Very, very, very aggressive buying. And although it's 6260 is very close to it, nothing is telling us that we're going to head there, and nothing really we could have predicted other than simply with absorption. But here, we do see that there is a barrier here, 6270, and in reality, I was planning to take a short from here, 6270, if we saw a reaction from that level. But as you can see, we broke through that level pretty easily. Just one strong push through. With aggressive buying, we broke straight through. As we broke straight through, that buying just came in very, very aggressively. And we had these 3 levels marked out as well, 6280, 6282, 6285, all with significant passive selling areas. And if you take a look, we do get straight into those levels. And we swept the first one. We come into the second one, basically touch it, and reverse. And let me just keep moving and try to show you guys this. Yeah, there's a touch of that area. Soon after, we see the selling start to incur, pushing price down. And let's take a look at what happened there. Essentially seeing lots of volume. We see a battle between buyers and sellers here at that area, but lots of sellers there. Now here was a turning point. We see this barrier here, passive buying barrier with 170 passive participants. How are aggressive sellers able to react to that? Are they able to break it, or are they able to, or buyers able to defend the area? And as we do see that buyers do defend that area. 643. That is interesting. Seeing lots of volume there. Okay, realistic and long position would not have been a bad idea here. But the fact that let's just mark it out to see what could have occurred. And what's the time? 78.25. So right down here. Stop loss 7.5, so 7.45. The target would likely be 8.2. Let's see what's happening. Where was what? 7.8, 7.8.25. In reality, it would not have been smart to take a long there simply because of condensed passive liquidity. This is condensed here, and it's not viable to take a long even though we're at that passive buying barrier, simply because this area is condensed with lots of passive selling, and it's in reality it's quite hard to predict whether how much price may go up or how much price may go down, especially with that sudden incurrence of volatility in the market. We want to stay flat for a bit, as we did see a reaction down from that level there. Nothing is directly leading us to take a long there. While if you take a look at the previous thing, you can clearly see that it went into passive sellers and then moved down into a target. While here we came down into passive seller area, saw aggression from that passive seller area, saw a small reaction, but because that aggression occurred and incurred and continued to incur, saw aggressive selling start to come in and break through that barrier, and then the shorts would have incurred after that. Now it's 10. And as you notice there again at 10, what we saw happen was that came down to this bookmap level relative area, started pumping again. Right around that 6285 area. Oh yeah, I was potentially looking to get long over here, right? Where we saw this 219 buy barriers occur. But unfortunately, it was at 10:03, so 10 a.m. candle here. But unfortunately, the sellers were not able to push into that barrier for us to see absorption. And because of that, nothing signaled to me that it wasn't a spoof order and that it's actually meaningful that sellers are actually getting trapped, so we did not enter. If you take a look, it does look to be a spoof order as well. Yeah, there you go. But we do start buying up and we do continue to buy up. And then we come back down. By that time, it's already 10:25 and the day is over. So that was essentially the entire analysis of the day. We talked over this trade, we talked over the market, peak market session activity. But what I also want to do before we conclude this video is to discuss today's price action just a little bit and discuss why it was a good idea not to trade today. I do want to take a look and see what may have caused this move. Give me 1 second, I'm just searching. But yeah, what we saw, let me remove this 30-minute, right, because it got broken through prior. And this liquidity. But we essentially saw price break this liquidity, not react too crazily. Then, price went down to our 6260 area, bookmap liquidity. From that bookmap liquidity, remember, bookmap liquidity is going to be the actual liquidity and driver of the markets as compared to this liquidity here. These are just lines on the charts. They could be noted as supply and not supply and demand, potentially supply and demand, but they are support and resistance lines marked on the charts, technical analysis. No legitimacy proof that there's actually participants there. Bookmap tells us that there's participants there, and that is why. 16, 17. Stock rose after rallying several major technology companies. Oh, it was with Nvidia reaching 4 trillion market cap, as you can see here. Nvidia briefly reached 4 trillion market cap, and that caused that peak in the mic. And they're still divided about how tariffs would affect inflation. But the main driver, I believe, was the fact that Nvidia became the first company to reach 4 trillion market cap. And that created this move that we saw here. And something very interesting about this move is both on NQ and ES, if you'll notice. On ES, we came straight to our liquidity in a relative zone, took out liquidity by essentially just a tick or maybe even a tap, and saw aggressive selling move down. And these were the all-time highs. No, not the all-time highs. They're all-time highs on NQ, I believe. But this was a key level that we marked out and validated with volume on the footprint as well in one of our pre-week analysis. And if you take a look here on NQ, same thing. We came, swept the liquidity, aggressive selling followed through. And if we take a look, that is the all-time highs of NQ. So we are pushing higher on NQ, and ES is lagging behind a little bit, potentially leading us to believe that one of them might follow the other to control that correlation. But yeah, just something I wanted to point out and something that's going to be very interesting to discuss in tomorrow's morning pre-market live. So I hope to see you guys there, but that's all I have here for today. I won't be analyzing today's market, I think. Maybe I will. I'm not 100% if I'll analyze today's market because it was FOMC. I might do that by myself without a video. But if I do make a video on it, I will upload it. But I look forward to seeing you guys tomorrow morning on a pretty calm day and see how we can analyze the market then. So I hope to see you guys there, and that's all I have here for today. Before I conclude, I do want to say if you have any questions, feel free to join the Discord server. The link is in the description down below. There are many resources that I highly recommend you guys to check out. Additionally, if you want to take advantage of Bookmap live streams and start using Orderflow for free, let me say that once again because I was stuttering quite a bit. But if you want to start using Orderflow for completely free, starting even right now, take a look at the links in the description. Addis has been a channel partner for quite a bit, and I honestly think it's one of the best order flow tools that is very easy to utilize and use, and is generally moderate in terms of live data and pricing options as well. But you can start practicing using live data on crypto, I believe, and also 15-minute delay on the footprint. So you can do what I did here today because I would not have required live data. I only require live data when I'm live trading. 15-minute delay is not much at all, and you can backtest your trades and see how you can integrate order flow into your strategy today. So I highly recommend you guys to check it out, and that's all I have here for today. I'm looking forward to seeing you guys tomorrow morning, but that's all I have here for today. Have a great rest of your day, and goodbye.